All right, I'm going to go over the opening range break strategy or ORB strategy on S&P. So these are the results. So someone had asked about the opening range break. I know there's several people that trade it. You have to decide how long you want to wait after the U.S. stock market opens. That's what it's generally used on. Wait till after the U.S. stock market opens to look for an entry. Now, some people trade the first 15 minutes of the U.S. stock market. They sit out and wait, and at 9:45 they'll look for an entry. I'm going till 10 o'clock. I'm using the first half hour. The reason why, as I looked back at the charts and scanned back, again, we're using a tool on here that quickly highlights that area of 9:30 to 9:45 or 9:30 to 10, and so quickly able to analyze and see what happens. And what I didn't like, what I saw was that between the 9:45 and 10, sometimes it would signal to go short, and then at 10 o'clock it would reverse, okay? And only to that trade be a loss right off the bat. Whereas if you waited 9:30 to 10, you wouldn't have even taken that trade. And then it pulls all the way back and gives you a buy. So I had just seen too many times where that had happened for me that I'm like, why would I take these losses? Why would I want to? So I backed it up to 10 o'clock. So I'm looking at the first half hour of the U.S. stock market. Again, that it would be 9:30 to 10 Eastern, and only looking to trade that. So this was traded Friday. It was back tested over the weekend. I posted my finding on Nasdaq. I went through looking to see how it went. And typically Nasdaq would at least go to profit target 1, sometimes profit target 2. A lot of times it wouldn't go beyond that. So for me, it's breaking out, sure, but it's not moving very far. And that's typical of the indices, that they're not going to move. Now, that being said, most days it's not going to trend then. It'll break out, it'll give you a trade, you'll get profit, but it's not going to keep going. So for our runners, that's not the greatest news that we want to hear, right? Because we leave runners on to go the distance, to catch that whole move when things break out and just run. But I went ahead and tested it anyways. This week we're trading it live. I am doing it on a demo account, paper account, just because I'm not willing to put money up, even prop firm. I want to trade it and get familiar with it first. And then what I'll do is we'll get a prop account, a brand new one, and then we'll use it on an evaluation account. Something else I'm tracking is which one of the 4 indices is the best, okay? So as we looked on day 1, S&P passed profit target 3, and it broke out in the first 2 hours, okay? Between that first 2-hour time frame. We're only looking to trade, if we can, between 10 and noon. That's it. If we can trade between 10 and noon and profit, and then just manage our runner, move or stop to break even or half break, halfway to break even. And that's all we got to do the rest of the day is manage our stop. That's great. That's a great day of trading. Stress-free. You're only trading the first 2 hours. After that, you're just managing your stop. You better be comfortable and feel really comfortable and relaxed moving a stop. It's not the same as looking for an entry. So I know a lot of people like this strategy because it's time-based, especially people that work. What I've been telling people is if you've got a job and you're at work, you can sneak into the bathroom. You know, hey, I got to run to the bathroom, take a bathroom break, coffee break, whatever you can take at work. And you're going in and you're opening up the charting. And for me, how I mentioned it today, if that was me, I would sit there and put a pending order at the high, an alarm at the high, alarm at the low, and then go back to work. And then when one of those alarms are triggered, another bathroom break, another coffee break, whatever. So somebody at work can trade this, and I think that's what's appealing to a lot of people is those two factors, especially for me, as I looked, that a lot of times it would break out of the high and low between those first 2 hours. So if you can profit there and then just have a runner on, that's great. Okay, so I tested it then at that point after looking back over a month, going, hey, this looks decent, because someone had asked about it. They were having trouble trading it and said, hey, how can we make this profitable? I'm struggling with it. So that was where I started with it. I'm like, okay, I'm always willing to look at something for somebody and figure out a way to make it profitable. Most of the times it's that closing partial off to lock in some of your profits will turn about any strategy profitable. I don't care if it's moving averages, MACD, whatever. So once I did that test and marked up the charts, got a feel for it, then basically I went into full replay mode and just used TradingView's replay, went back and replayed candle by candle. 3-minute candle is what I trade. So went back and traded 3-minute candle, placed the trades, placed 3 contracts. That's what this is tested on. So you can, obviously just double, triple it, whatever you want to do. But 3 contracts on, closing 2 when it hits profit level, and moving your stop to halfway to break even or to break even. That depends on the trader. Depends on what you're comfortable with. So that's what it was tested on, NQ. We got the results. It was like over $13,000. Was that, I think it was about a month and a week. So it was $13,000 that it made just doing that with 3 contracts. So I went ahead and tested it on S&P tonight, and I will go ahead, the same time frame, and I will go ahead and test, run it on Russell and run it on Dow. I'm going to go ahead, I wasn't going to do it, but I'm going to go ahead and run it on all 4 indices to see how they pan out. Something to keep in mind is they don't all pay out the same. It's, off the move. So Nasdaq hit 13K. Okay. We were at, I'd have to go back. The videos posted on the strategy. I'm going to put all these into a playlist on YouTube so they're all together. So this one and the other one, I'll move it over to the playlist. They're going to all be in one folder. So again, that one hit 13K, just 3 contracts, and closing 2 at partial on 1, letting it run, capturing some extra profit on some of the trades. Again, they don't tend to break out often, but when they do, we want to be there for that. That's the whole reason for leaving a runner. So I thought it did really great for that. Like I said, it was about 5 weeks, right around there, 5 weeks, and it ran up to this past Friday. So real happy with the results. I believe it was around 77% win rate. Okay, so happy with that as well. This one you'll see because I ran it through the same test today. So to quickly go through, I'm not going to spend a lot of time on our rules. Basically, again, we're trading the morning session, 10 a.m. to noon. We're going to take every trade, every time it breaks out. So if it breaks past a high and goes up and does not hit profit target 1 and comes back and stops us out, but it goes back and breaks the high again, we're going to get in. We're going to take all the trades between 10 and noon. It's going to be 1 to 3. Okay, if it breaks and runs a little bit, it's 1. That's what we want. That's not always what happens. So something to keep in mind between that 10 a.m. and noon, if it breaks and just closes above the high, because we're waiting on a 3-minute candle to close above the high or low. If it breaks up and a candle closes above the high, and then it goes back down and stops us out and goes down and breaks the low and goes back up and stops us out again, which could happen during the back test. It happened a few times. What's it done? So we're looking at that first half-hour break. That's a time stamp. Okay, that is a time range. We're putting a time on it, 9:30 to 10 o'clock for half an hour. That is a time range, not to be confused with a movement range. Okay, a structure range. It's a time range, 9:30 to 10 every morning, 9:30 to 10. You're putting a timer on it. What's your high? What's your low? Okay. Well, sometimes it'll break that high, go up a little bit, forming a higher high, come back down, and even break the low. That's what you'll see on this some days. So again, you're taking every trade from 10 to noon, and some of them you'll take the 2 losses. Some of them you'll take 1 loss. So during the redemption period, and what that means is that if it goes up and breaks the high and comes back down, breaks the low, and pulls back in the middle of the box, what has it done? It's just formed a higher high, a lower low, but it's formed a range. Now it's a structure-based range. It's a price-based range, not time-based. Time-based is your 9:30 to 10. That is purely a time-based range. You're looking for the high in that half hour. The price-based range, the market maker movement range that's created is the high and the low when it decides to break above. That's the movement range that we're looking for. So if it forms that new high that's barely higher, new low that's barely lower, comes back in the middle, what do we expect to happen? Eventually it's going to break out at. It's a new range. Okay? It's a wider range than what we mapped out between 9:30 and 10. It's a little wider, and now we're looking for a breakout of that. We're looking for a breakout. We know that eventually it's going to break and run. That's where if it doesn't do in the first 2 hours, it typically will do it here between 9 p.m. and 4. So you're taking all trades in the morning. I call it the redemption period. That's just what I'm calling it. 12 to 4 is redemption period, meaning you're taking all trades in the morning. You don't trade in the afternoon. You don't have to. So you take all trades in the morning, you got a winning trade. Okay? If you got a winning trade, you don't have to trade in the morning. Okay? You're only trading in the afternoon. You're only trading in the afternoon if you had no winning trades. So if you got a winning trade in the morning, you don't trade. You don't need that redemption. Okay? If you take the trade in the morning and it's a loss and it hangs out sideways and then eventually breaks out here, well, that's your redemption trade. Because if it doesn't break out here in the first 2 hours, it typically breaks out here. I've went back and looked. Day after day after day after day. Went back and looked. So it'll typically break out. Now again, it doesn't always move very far. The indices. Sometimes they only go to the first or second profit target. You're only going to take one trade. You're not taking all the signals. Because if it breaks out and you take another loss, you're done. It's over. The day's over. So this is a hard set rule that you need to stick to. All these right here. Okay? But typically taking that redemption trade will help you recoup some or all your losses. If you take one loss in the morning, typically this redemption period trade will allow you to make back your loss. Most of it, sometimes more than it. It just depends. If you take 2 losses in the morning, the redemption trade breakout will typically cover the 1 loss or close to it or more than it. But typically it covers 1 then. So you'd still have a losing day. If you have the first 2 trades in the day a loss, you take a winning trade in the afternoon that covers 1 of your losses. I would rather have trade all day like that, take the afternoon trade and have it cover 1 of my losses. Now I'm at the day, I'm at 1 loss instead of 2. I never saw it come out where it was 3 losses. I can tell you that. Going back and looking at chart after chart after chart, I never saw it take 3 losses. So typically that afternoon breaks and at least goes to profit target 1 or 2. If it goes just to profit target 1, it'll cover 1 of the losses. So if you only have 1 loss in the morning, it covers. If you have 2, it covers 1. If it gets to profit target 2, now you're making profit if you only have 1 loss in the morning. So that's kind of how it works. We're going to buy, well, we'll go over those here in a minute. There's the rules for our trade. I'm just going to quickly go through these because I've got a video out there that I did on trading it. Basically, we're going to mark the high and the low between 9:30 a.m. to 10, and we're going to look for it to break out. We're going to put our stop halfway between the high and the low. That's where we're going to use for our stop loss. Okay, buy rules. Basically, we're going to buy when the price closes above the high. We're going to sell when the price closes below the low. That's pretty simple. As far as stop placement, it's really up to you. I'm using a half stop, so I'm going in here in the middle of the zone. That's why I have that line turned on, and going in the middle of the between the high and the low. Okay. And out on the Discord, I've been posting charts left and right that show you why you should go to 10 a.m. and not 9:45. Okay, because a lot of times you're getting in 9:45 and it's just reversing, and then you have a loss in the first 15 minutes of your trading day. That's not what we want. We don't want a loss in the first 15 minutes of our trading day. But a lot of times that's what happens if you end up trading the 9:30 to 9:45. So as far as stop losses, these would be the first, the selections you would have to make. Do you use a quarter loss every time you get in the trade, the half loss, 3/4, or the big loss, the other side of the zone? I don't recommend using these two, the 3/4 or the other side of the zone, not on these indices. Okay. If it comes down past the middle, it's typically gonna go to the bottom. Okay, not always, but typically it goes all the way to the bottom. So that's gonna save you some dough right there. The quarter loss, as you can see in this chart right here, and I didn't really select this for that, but it broke out through the top, and if you used a quarter loss, you were almost wicked out. So, and it could happen even on a half loss, guys. But tendencies, if you look back, were that it would come down, take you out. Okay, yeah, you lost a quarter of a trade or a quarter loss position here, but then you got to get back in, and then you get back in, it would come down and stop you out again. So keeping your stop at the halfway point is what I decided to do when not only testing this but moving forward. Placing a trade, again, you're only going to do it when it breaks through the high. And then as far as moving our stop, again, when it comes up and hits this right here, profit target 1, hits it, we're going to close out 2 contracts. So by doing that, what we're going to do is we're going to place a 3 contract trade here, okay? And then we're going to have a sell limit order of 2 contracts. So when it goes up, it's going to close 2 off for us automatically. We want to do that. Make it mechanical. Don't sit there and rely on yourself when price comes up here and touches that line to close out the trade. Because normally what happens, we're emotional creatures, and you say to yourself, oh, I'm up $150. Surely it's going to go further. I'll just write it out. And you won't close the 2, and then it turns around and comes back. So make it mechanical. Put the pending orders on. And then once it hits that level, then you have to decide, are you moving your stop up here to a break-even point, or are you, I'm using, again, the half loss. Do I just move it up here? Halfway, this is the half loss, halfway, because my stop loss will be here, but halfway between where my stop is and where we got in. Because, again, that's what we use on our that power trade. I'm just calling it that, guys. The profit target tool, where we turn the Fibonacci tool into a profit target tool. Don't ask questions. There's a video on that too, if you want to watch it. But basically, we turn the Fibonacci tool into profit target tool, where we would take and pull it from our low, our stop, to where we got in, and it would print out the profit targets, 1-to-1, 2-to-1, and so on. All right. Once you can move your stop to break even, you can relax. If you move your stop to halfway, then you'll still lose back some on the runner, but half of what you would if you left your stop. So it's still time to relax, guys. Okay. When a candle closes above, when you're moving your stop, again, we're going to put a pending order at PT1, and when it touches that pending order, it's going to close it. However, when we start moving our stop, I've been waiting for a candle to close past the line, not touch the line. And I'll tell you, like up here, I'll tell you several times, if you choose to move it when it touches, you can do that, but sometimes it'll come up and fall short of breaking or hitting the line, only to come back and dip below this level and then go on and then finally break it. So it's really up to you. That stop movement, the stop placement, originally, and then where you move your stop when you're after you close partial. That's really up to each individual trader. There's a sell signal, moving stops. Again, I don't want to go over too much of that. Signals on the chart, again, this indicator shows a green arrow for a buy and a red arrow for a sell. Here's the results for S&P. Okay. Again, I told you this is going to be a pretty short video. I think it is, should be. So this is what formed on S&P. Now, again, I've already got the video results. I did a video last night on the results on Nasdaq. Okay. So this is on S&P. So S&P, it came out and it did 4,500. And basically, again, it was that 5-week span. That's not bad. It's almost 1,000 a week. That's not a bad income. I didn't break it down as to what it was each week. I just know that in a month span, $4,500 is good for most people. We did 3 contracts, or I did 3 contracts. What if you did 6 instead? Well, then this is double. It's 9 grand. Okay. What if you did 9 contracts? It's 3 times this, over 13,000, about 13,500 and something. And what if you did 4 times this? It's 16,000. That's just an increase in contracts. It's the same strategy, the same exact strategy every stinking day that you're trading. That's it. Now, if you want to commit to this every day for the rest of your life, then commit to it. The win rate's 72%. Guys, I'll take that win rate. I'll take it every month, all year long, for the rest of my life. That's a good win rate. The best trade was 1,800. Our best trade in here at 1,800, look at how much of that, almost 2 grand, almost half this profit. Not quite. Okay. What is that? Not quite a third. But anyways, that's our best trade on there. So that's the performance of running the replay. That's what the equity curve looks like. Okay. Max drawdown was 768. That is based on, of course, the movement against us on the way down. Let's see, 36 trades total. So as we look at the trades, this one had 36. We had more on NQ, but we had the same result, basically the same win rate. So we're looking at net profit, about even, 2,000 on longs, 2,400 on shorts. Okay, that's what we want to look at. We're looking at both the shorts, the longs, looking. Down here, you'll see at the bottom 3 contracts. That's all. I just used 3 contracts on it. So this shows that I only used 3. So I'm not fudging the numbers. It's truly just going through and run it through a back test. Okay. What else do we want to look at? So this is the trade analysis, total trades. Again, 36 trades, 18 were long, 18 short. So it's split in the middle. We come down to losing trades. We had 5 losing trades long, 5 losing trades short. I don't know how that happened. Again, the percentage profitable is 72%. And so our largest winning trade was 1,800, and that was on a short position. And then the largest long position was 585. Okay. Largest losing trade, not percent. Largest losing trade was 648 on the shorts and 416 on the longs. And that's what I want to see too. I want to see that my largest winning trade is bigger than our largest losing trade. So overall, between everything, our largest winning trade is 1,818. Our largest losing trade is 648. So not quite 3 times less, but our largest win rate's almost 3 times more than our largest largest winning trade is almost 3 times as much as our largest losing trade. Okay. Let's see what we got here. Profit factor 2.7, pretty much. The longs 2.49, the shorts 2.3. They balance out to 2.67. So here's what it is overall. So again, Nasdaq was different. Nasdaq profited over 13K here with their 3 contracts. Okay. So all we're doing is we're taking that. I traded 3 contracts, closed 2 at partial, left 1 runner on, $4,516. That's not bad for the month. Okay. Profitable month. I'll do this every month. Okay. Multiply it times 2. If you did 6 contracts, you would close 4. Okay. You're going to leave 2 runners and it would be 9,000. So basically I just multiplied these times 3. If you did 9 contracts, you're closing 6, 3 runners, then you're up to that 13,000 for the month. And then if you ran 4, you're up to 12 contracts, 4 times 3. So you got 12 contracts on, you're closing 8 and leaving 4 runners on. And your results are 18K. So again, as you look at these, 3 contracts is small. I consider 3 and this is micro. Okay. So we're talking about micro S&P. We're not, and so 3 contracts on that is small. It is. It really is. You're talking 3 little contracts. Some of you will get, it's like you'll make 100 or 200 or 500 for the day. Okay. And if that's where you're at in your trading or need to be, then that's for you, 3 contracts. If you're looking for a little more, you'll go 6, 9, 12. So the other thing to keep in mind is with prop firms. You can use this strategy to take the prop firm challenges and then also trade your PA account. Because typically the indices don't just break and run, you're not going to have that huge profitable day where they say that profitable trade is over 30% of your whole total profit. You're not going to have it with these, but you need to trade the same thing. You need to trade consistently. So you need, and that's what they want to see. So you need to trade 3 contracts every trade, 6 contracts every trade, or 9 or 12. Commit to one of them and trade that one and keep trading it. Don't trade 3 and then you're trading 3 contracts for 2 weeks. And then all of a sudden in week 3, you put on 20 contracts. That's going to be a red flag. Okay. So you want to be safe in your prop trading. So that is all I have on the video. And I will again run Russell and Dow and get those posted as well. So I hope you enjoyed. The results look good. I'll test the other ones out. And tomorrow we'll be live in the morning and trading. And I go live at 9:30. And we're looking between 9:30 and 10. I just kind of chat, but we're looking at the setup, and I'll go over a few other things. And then after 10, we look for that to break the higher low. So enjoy yourself. Have a good evening or day whenever you're watching this or morning. Safe trading, and I will talk to you later.